See if this works. Here we go. And yes, we are live. Hey, everybody. How you doing today? It's your buddy Uncle Bruce, live on September the 26th from Vienna, Austria. Hopefully, this live stream will work. We've got somewhat spotty internet connection, although it's been pretty good last little while. So we're crossing our fingers and hoping for the best. Welcome all of you from wherever you are watching us from, literally around the world. Nice to have you here with us. Jen and I arrived here last night from Berlin. We left Berlin yesterday morning, and it was a long day. We were ready for kind of a long day. We were supposed to get here in something like 7.5, 8 hours, but it took quite a bit longer than that, and it was not as much fun as expected. Anyway, we have we have made it, and the hotel we're in is beautiful. If you're looking behind me versus what you saw behind me in Berlin, there's a little more room here. I am inside actually a living room right now. We have a bedroom, a living room, and 2 rooms for our bathroom. But that's the difference between a chain hotel like Hampton Inn, US kind of version, versus a boutique kind of one-off hotel. And so we're enjoying that. And, welcome to Europe. Why not? What else can I tell you? Gorgeous weather here, a beautiful city as always. We're looking forward to exploring it again, like we did last year, going forward. Welcome all to the program. Those of you watching the futures with about 57 minutes to go before we start trading, you'll have noticed like me, the markets are negative. We're about 103 points lower on the Dow, 0.3%. S&P is off a third of a point, 14.25 points down, and NASDAQ is also off a third of a percentage point, 51 points at the moment into the red for pre-market estimates on our 3 exchanges over there. Crude oil down 50 cents a barrel in Texas, 89.17 a barrel. We were under that. We were in the 88s earlier this morning. The rising US dollar is causing oil to become very expensive for other countries' citizens. And that in itself puts a damper on the price of the commodity. If you have to pay US dollars for crude imports into your country and your country isn't made up of US dollars, now you got the currency problem on top of the $89, $90 oil price problem. It's a double whammy, which means prices at the pump rise very quickly overseas. In some cases, certain countries don't even import crude. They import refined gasoline and diesel. In effect, they bring in the product that goes right into your tank of your car. That is much more expensive per barrel. And so these price points going up in the barrel price and the currency going up really is a double whammy against demand for certain countries around the world. And that is what I have been alluding to many of you out there, saying to you, there is no shortage of oil and gas in the world. There's no shortage of the actual commodity. The question is, really, is there a shortage of money to buy it, the kind of currency that Saudi Arabia wants and so on? And then the question comes to usage. How much do you need? How much does the world want of this commodity versus how much is available? And to me, the big equalizer, when it's all said and done, will be eventually supply and demand. And I think there is more supply available of everything in the energy area than needed, because I don't think the demand is there. Slowing economies, certainly in China, Asia, Europe is slowing. North America apparently is slowing. I just don't see how the commodity can go up in value. And so we may have a double whammy on the downside for oil. We may find that if the US dollar continues to appreciate with high interest rates, for longer and a tightening money supply and the demand usage going down for crude, we may have crude oil take a hit, an accelerated downward hit that many are not expecting. Just saying, I'm just an old man telling you what I've seen time and time again. I remember back in the 80s, I know you guys love when I talk about the 80s. I remember how Canada couldn't win for losing. Canada sitting on one of the biggest supplies of oil and gas on the planet. There's only one country that has more oil than Canada does, Saudi Arabia. Canada has more oil than Russia. Canada has more oil than America. Canada has more oil than any other country other than Saudi Arabia. And I don't think we've discovered it all yet, my personal belief. I think Canada's more it can find. But in any event, back in the early 80s, Canada, sitting on all this product, Canada was doing what it does best, beating itself up among Canadians. Sound familiar, Americans? Canadians in Eastern Canada and Western Canada were at each other politically and emotionally and economically. And in Alberta, where I was in the West, oil was being discovered, found, refined, and attempted to be sold. And in the East part of Canada, oil was being imported from Saudi Arabia, from Venezuela in those days, Mexico, Libya, and Iran, and everywhere it could, wherever Eastern Canada could find it. Just like Eastern U.S., they were importing oil. Europe was importing oil because it was relatively cheap compared to what it is now. In any event, Canada was beating itself up, and there were two prices for oil. The oil was the world price, that oil was coming into Quebec and Ontario, Eastern Canada, and the domestic price. And this was the price that the government of Canada allowed producers in Canada to sell oil to fellow Canadians for. And that price was $10 a barrel when the world price was as high as $40 a barrel. And do you think the folks in Alberta were a wee bit upset by that? Oh, yeah, they were upset by that. And when the government of Canada decided, we're going to make it even better for Canadians, we're going to create a national Canadian oil company owned by the taxpayers of the country, and we're going to set the rules up in such a way that all kinds of producers of oil and gas that are not Canadian companies, but are overseas corporations like American companies and European companies, they're going to have a tax disadvantage. And we're just going to come in with a national oil company and offer to buy all their production and all their oil wells and all their research at what we think is a fair price, $10 a barrel. And so a whole bunch of European players and American players walked out. They sold out and took a hike. And what happened shortly after that? Hundreds of thousands of job losses in Alberta, because all these different oil and gas companies shut down. They sold their production to the Canadian company that needed one receptionist. They needed one set of accountants. They needed one set of geologists. And all the other geologists, receptionists, accountants, lawyers, landmen, and all these other people, they were laid off, and there was no one else to work for, because the number of companies in Western Canada shrunk. And guess what happened next? Houses were on sale, cars were for sale, furniture was for sale. Everyone got the hell out, and Alberta got the crap kicked out of it. And that was what happened in Canada in the early 80s, I remember. Fun times? No, not fun times, because being a stockbroker at that time, watching my clients' assets just depreciate like this, not good. The entire country of Canada suffered a massive recession because of this. It was self-induced, domestically made in Canada. Kick yourself in the butt and shoot yourself in the foot at the same time. How we did it is unbelievable. It took almost a decade to recover from that, especially in Alberta. But in the world of politics, it took another 6 or 7 years by the time the Liberal government of that era of the 1980s got kicked out, and the Conservative Party came in, kind of like the Republicans, based in the West. They took over and started to try to make things right. Of course, during the 2000s, Alberta was booming big time because oil now was allowed to be sold after the mid 80s at world price, no matter what the world price was. Unfortunately for Canada, by the time Canadian companies could sell oil to themselves for the world price had gone from 40 bucks a barrel to 10 bucks a barrel. And this is what I want to tell you folks. If you're under 50 years of age, you have no idea what this is like. Right now, all you know is that oil is at 89 bucks a barrel. And it can go to 100 a barrel and 60 a barrel. But, you saw oil negative 2 years ago for a couple of weeks. But 10 bucks a barrel for about a year and a half is what we saw once the oversupply of oil became evident to the rest of the planet, because Middle Eastern producers could turn on the taps and just flood the market with oil back in the day. Going forward now, it might be the consumers that might make oil drop in value, not the producers by oversupplying oil. It could be the consumers by under ordering oil. And this is the 20-something and 30-something generation out there today. If you're in your 30s and your 20s, there's a strong likelihood, if you're in a G20 country, you are thinking of getting yourself an electric car. Sooner or later, that's the way you want to go. Despite all the predictions of, it costs more to produce an electric car and it's worse for the environment to have an electric car, all that BS that you're hearing from these oil shills, despite all that and all the so-called rare materials that only China has and no one else has on the rest of the planet. Okay. There is a wave, and I've already seen the results of it to a degree that is unstoppable. It's a tsunami of people. Every month, every year, another group of people turns 25, 26, 27, 28. They graduate from school, college, whatever, and they are now going to get their own vehicle, depending on where they live. And many more people are getting e-powered something. E-powered cars, e-powered motorcycles, e-powered bicycles, or they're not getting cars at all, and they're riding mass transit. This wave will not end. The 60s are over. The 1960s are all said and done and finished. The flight to suburbia has happened. The idea of mom and dad buying a house out in the burbs and only dad going to work and mom looking after the kids with the second car, all over. That is all done for. In North America, it is next to impossible for most adults to have children and not have both adults working at the same time. It's almost next to impossible. The only one thing that has made it possible for people to look after their kids on their own rather than put them in daycare, stay-at-home work is the only thing that, and thank you, COVID. It was all because of COVID. It brought that forward in a big, big way. And a certain number of people out there who are in that lower middle class area have decided that's the way we're going to go. No matter what we have to do, we're going to find a way to have one of us or both of us work from home and only commute to the office on occasion. And that way, one of the two parents at all times are with the kids, take them to school, get them home from school, and not have daycare involved in the raising of our children. This means that a lot of folks are going from 2 cars to 1 car, going from 2 gas guzzling cars to a hybrid vehicle of some kind, or ultimately going from 2 vehicles to 1 vehicle that is an electric vehicle. Might be the cheapest one they can find, but it's an electric vehicle. And this means goodbye to the Ford Galaxy 500, the Chevy Impala, the Plymouth, oh gosh, all the brand names. You remember them all? The Imperial, all these big, fat, gas guzzling cars, and a lot of pickup trucks are being abandoned by certain segments of the middle class. Can't afford them anymore. Because if you want to go out and buy a brand new pickup truck today to drive around town where you live, you want some creature comforts in those vehicles? Have you seen the price stickers for a brand new F-150 fully loaded pickup truck or a GMC or a Dodge Ram? You will be shocked to see how much those are. What can I say? The future is getting interesting. Tesla's pickup truck. I don't know how well it'll sell. It's a giant triangle moving down the highway, but there will be a certain segment of youthful owners who will go that direction rather than the other direction into a diesel or to a gas guzzling pickup truck. I don't know if the sales of pickup trucks will drop 5% because of the Tesla, or 10% or 20% over the next 5 years or so. But don't be surprised if Tesla brings out the first pickup truck now, and in about 3 to 4 years, they bring out a smaller pickup truck as their second vehicle and a smaller SUV type vehicle as well. And that will just chisel away at the big three and anyone else making these vehicles. Even the chicken tax won't save the auto manufacturers in North America from losing market share of their gas guzzling pickup trucks. What's the chicken tax? If you've been here a while, you know what that is. The Lyndon Baines Johnson tax to answer Europe's quota taxation on U.S. chickens back in 1964-5. This was a retaliatory tax that America imposed on light trucks and light vehicles from Europe. They went after pickup trucks from overseas manufacturers. In particular, the big three automakers were saying to President Johnson, this company called Volkswagen over here, we don't mind they bring in the Volkswagen Beetle, just college kids. They're the only ones stupid enough to drive that vehicle. But we don't want those kids driving a whole bunch of these pickup trucks that used to be Volkswagen campers. The campers can come in, but not the Volkswagen pickup trucks, because they're coming up with all kinds of designs that could kill American jobs. So the president put in a 25% duty on all light trucks from anywhere in the world to come into the USA. And that shut down Toyota, Nissan, which used to be known as Datsun, Honda, and everyone else. You had to produce in the US in order to sell pickup trucks. And that gave Detroit a 25% advantage on pricing to sell pickup trucks to Americans for 25 to 50% more than they should have, to screw American consumers in the ear for 50 years, 60 years, and it's still going on. The chicken tax is still on. The old chicken tax from Europe to the US lasted less than a year, but the chicken tax for trucks is still there after all these decades. And the union, the UAW today, they know about the chicken tax. They know how well the F-150 sells. And so they're saying to those car companies, it's time for our workers to get a decent raise, because the top brass of these automotive companies are making 300 times what our workers on the factory floor make. You guys can afford to give our guys a raise in pay. After all, the last 3 negotiations we've had over the last 12 years, we've given you concessions. Enough with the concessions. It's time for payback, because you car companies are making nothing but money. And there you go. There's your story about all that. The 80s, the oil pricing, oh, the hardships, and all the fun we had. How governments try to get involved to make things better, but end up making things a whole lot worse. But hey, let's not forget, every corporation that's worth its salt has lobbyists in every world capital, every state capital, every provincial capital in Canada and around the world to make sure they lobby their people for what it is they want. And so your pharmaceutical industries, your auto industries, all the health companies, your cigarette companies, insurance companies, you name it, they're getting their pound of flesh out of your butt in the name of free enterprise and better for people to have less government and more free enterprise to do whatever free enterprise wants to do. That's the way to go. And so there you have it. What can I say? It's socialism run amok, and yet it's called capitalism. It's an amazing business. It really is. Anyway, there it is, kids. I hope you're having fun today. We're still looking at a 162-point drop on the Dow. It's getting worse with 39 minutes to go. We're down almost a half a percentage point on the Dow. We are over a half a point lower on the S&P, 24 points. And NASDAQ down 81 points, 0.55 of a percentage point. We're losing ground on this market going into the open from what I can see here from this point and vantage point in Vienna, Austria. Welcome all of you. Here it's 2:52 in the afternoon. I know in America it's a lot earlier than that, but welcome all to the show. And it's great to have you here. It's nice to see you all here. Thank you to Lame Duck and Robert, Mail-Out, JR. Thank you, my friend. Deep Value, Karen, Mandu. Look at those thumbs ups coming already. Richard Carlin, DH Ruda. Love it. Amy, Computer Whiz, no sell, no sell. Who's cleaning up those dead condors on my lawn? Chase, Rosita Parker, thank you for the 25th thumbs up. Dude is here. Lissy's here. Good afternoon, Uncle Ben. I missed you yesterday. Hope the travels are going well. Thank you from Computer Whiz. Alberto is in the house, which means we can begin the show today. Absolutely wonderful. Nice to have you all here from wherever you are watching us from. We love you. Thank you very much. Hector Salamanca, thank you, my man. Larry Titus, good morning. Thumbs up number 36. Matthew, I'm number 43. Yes, more downside, says Big Bear. Jay is here. Jay, Big Bear, you got to become members. Spicy, how you doing? Bob Cobb, become a member. Hurry. Cameron, become a member of the channel. Nice to see you here. Jay is here. I need a new member, Jay. Coffee Kids Trading, join today. Manager, number 60. Thank you, my friend. Option Nomads, we're here. Maria Powell, I'm the 65th thumbs up, Bruce. You were going for 200 today. Flint Creek Soap Company, good morning, Flint Creek, and all of you. Thank you so much for joining in. Today is September the 26th. October the 21st, in less than a month, will be a meet and greet in New Jersey, right across the river from the Big Apple, Secaucus, New Jersey. Jen and I will be holding a meet and greet for all of you who would like to join us and see us in person. Looking forward to it. It's Saturday, October the 21st at the Harmony Suites Hotel in Secaucus, New Jersey. There is a bus you can take from the Port Authority right in Manhattan, right to the front door of the hotel and back. Pretty easy to get to us if that's where you're coming from. If you're coming from the Jersey side, expressways everywhere. Just check it out. Secaucus, New Jersey, Harmony Suites. Let us know if you're coming. Send me an email and say, Uncle Bruce, at bruceformer@hotmail.com. I'm coming with my friend, my wife, my buddy. There's two of us coming. There's three of us coming. Add us to the number so that I know how big a room I need to host the blessed event. Looking forward to having you here. Those of you out there who have been taking lessons, congratulations to you. Well done to all of you. Stockmarketswithbruce.ca is where you go if you want to learn how to write options on stock you've already got, or how to write options and how to do iron condor investing and everything else. That's where you go. Lessons are sitting there, 16 now, 17, 18 coming in the not too distant future. We'll take care of you. Looking forward to helping you guys out. If you have any questions, if any of you have had any logistical issues, you've ordered a class or you're ordering a class and you can't get the link to work, you let me know with a private email. I will get you the link and take care of you. No a problem. Thank you all. Maria Powell, thank you. Ghost of Bernie Madoff, another 200 ME for the pile. CYXT 5000 manager. News came out about Tesla on TDA. Tesla will be going down today. Manager, I have shorted Tesla yesterday. So don't know what Tesla's doing, but manager is on the short side of the equation for Tesla. The market is negative. That is a definite. Tesla's down 265 at the moment at 244.35. We've got Microsoft up $1.85. I've seen Google down 79 cents, Amazon down 66, Nvidia's off 87, Unity down 24, AI is down 34, Adobe down 404, Netflix down $2 at the moment. So it's a red start, no question about it. I don't know if it's going to be a really bad red day, but we're not getting any kind of green shoots forming at the moment. I think the realization for certain investors is becoming that, with these higher rates and higher inflation, it's going to be tough for certain stocks to compete with the 10-year Treasury. If people if pension funds buy a 10-year Treasury note or a hedge fund, they can get 4.5% for a 10-year. You can get over 5% for a 2-year, probably 5.2, 5.3%. IBM is paying about 4 or 5% yield, but Apple doesn't pay that kind of yield. Microsoft doesn't pay that kind of a yield. Why should I hold those shares when I can buy this stuff guaranteed by the people of America and get a guaranteed 4.5%, 5% of my money? Why would I buy a stock unless the company that the stock represents is a growing concern and is going to really improve business? Then the stock will outdo a bond. Okay, but you know what? A pension fund manager, the committee that runs those things, these guys are going, hey, we're sitting on tens of billions of dollars of our retirees' money here. Every paycheck, millions, billions are coming in here to be invested for the retirees that are out there and soon to be joining them. We've got to have cash flow for these people, and we've got to grow these funds on top of the funds we have to handle our fees, our overheads, and grow the pool to handle future adjusted for inflation payouts. Well, how about 5.5% from the government of the United States? Why don't we take that off the table? Why don't we put some billions into that? Why would we buy stock that the yield is 2-3% on? We're losing money. If the shares are going down, that's even worse. Interesting thoughts. That's what's going on here. Anyway, we'll find out what's going on. Thank you all. Alex, I am here. Good morning, everybody. Number 70 on the thumbs up meter. Appreciate it. Let's see what's going on. Welcome all to the show. Those of you who are Gold Bagel members right up here, thank you again for being members of this channel at the highest level that I offer. You know how much I love you guys. Those of you who do not know, which would be just mind-blowing to me, Gold Bagel members receive perks for being Gold Bagel members. One of the perks that has been recently added is when I produce a video during the mornings, a trade tip of the day. And today's trade tip was released early this morning. I know a bunch of you have seen it. I've seen the numbers come through. Last week, I was able to do a couple of those. We got one done on the 22nd of September. We did a trade tip also on the, I think it was the 21st of September, the 20th of September, the 19th of September. And hopefully those trade tips have found their way to you and your consciousness. And for some of you, been able to pull some of those off. And some of you have made these trades or have gotten these positions made, and you've made a few adjustments as we go along here, which is part of the course. You've learned how iron condors are created. You understand how iron condors can fluctuate in value based on markets of said condor, whether it's a stock or whether it's an index. You've also figured out and learned on this channel how rollovers work and how they can benefit you. And so I congratulate those of you out there who are taking advantage of some of these trade tips. If they're working for you, I couldn't be happier. Many of you tell me in no uncertain terms how you're doing, how you're doing on these trades. A number of you have let me know. Yes, definitely love these trades that you're making. That's why I'm a Gold Bagel member. I love the fact that you look after us with these added perks and keep those alerts coming, those trade tips coming, because I look forward to receiving one every trading day when you can. While you're on the road, send us one. Once I get back, we'll get you one every day that I'm on the air. So congratulations, everybody. Hope you found today's tip useful, informative, enlightening, and maybe, just maybe, the trade tip I issued today might spur you to go, well, I can do that kind of a trade on this too. Aha. And so now all of a sudden, a whole bunch of scheming is going out there, which is what the Gold Bagel members are figuring out. If you're a Gold Bagel member of this channel, you're a regular member of this channel, and you hang out here with this gang, if you're a lurker, you know as well. But if you're the members, you know even more that these classes I produce help you to understand how options work, are created, how they die, how they accelerate. But you're also figuring out how to take advantage of the market when the market adjusts and moves inexplicably higher or lower. And many of you who are Gold Bagel members, you don't even think twice about being a member of this channel at this $25 a month level. Why? Because you are making oodles of money above and beyond that. And so this membership fee that YouTube charges you to be a Gold Bagel member is a nothing burger. It's helping Jennifer and I, which is great because the power of the numbers is what it's about for us. But your payoff is, in some cases, unimaginable compared to the cost of being a Gold Bagel member. Thank you for your faith in the channel. Yours truly. Can't thank you enough for that. And so those of you who are chilling with Uncle Bruce members at the $10 level, please consider stepping up to the Gold Bagel level. Those of you who have never been a member before or have been a member, but it's been a while, come on back and try these daily trade tips and see for yourself if they can work for you. And if you're a lurker, please consider becoming a member at any level and join the family here, because we like to go member-only commentary during hours of trading. And we thank you all who are supporting this channel left, right, and center. Thank you for those of you out there just making donations through PayPal and or through Super Chats. Thank you for the birthday donations the other day. That was very appreciated. Jen and I were able to go out the other day and have a bite to eat in Berlin. Now here we are in Vienna. We're going to hit some coffee shops and see if we can get a museum in or two in the next few days, depending on how we're doing physically and energy-wise. And thank you all for just being there for us. We do appreciate all of your support of this channel, left, right, and center. Thank you very, very much. Thanks again. We've got 74 thumbs ups now that have come through already, and we're opening up in 26 minutes. Thank you for these thumbs ups as they're coming in. I think it might be time to do the right thing and maybe honor the Knights of Ni, just to make sure we cover ourselves, because the Knights of Ni are watching over all market participants, and we don't want the Knights of Ni to be angry. If you've ever seen that movie, The Holy Grail, you don't want to get caught with the Knights of Ni being angry at you. So Ni. I say to all of you from Vienna, White Feathers here, Chase, Rosita, Parker, Larry, Titus, the Knights of Ni emojis are popping up here from everyone else. We know who butters our bread. It is the Knights of Ni. We don't fool around with these guys. D.H. Ruda knows, manager knows. Ni. Absolutely correct. Thank you all for helping out, being on top of it. For those of you who don't understand what's going on, it's only a matter of time before you figure it out. We're crazy. We're nuts. The Big E is here. Welcome. Deep Value Options is here. Spicy Android is here. Alex, I have a question for you guys in general. All of you watching today, have any of you gone out and seen the movie Dumb Money at all? Has anyone seen this thing? I've been looking for reviews from any YouTubers out there. I found a bunch of them, mostly quite positive. They liked the movie. I'm curious whether any of you out there have been out to see it. Jen and I will eventually see this movie, but probably not until we return back to Canada, just because of our travel schedule. But I'm curious. Any of you out there seen the movie Dumb Money yet? I'd be kind of curious what's going on. Alberto, Gold Bagel member supreme, tip of the day, pays a year's membership. You're the GOAT. Thank you, my friend. Yes, I would think that a $300 profit is easily available to any of you if you're able to take advantage of some of these trade tips. It's not that everyone is guaranteed to be a winner, but I suspect that there are way more folks winning on these trade tips than not. And I would think that these are definitely going to pay off. Options Nomads will wait until Dumb Money is available on streaming to watch it. Right on. Yeah, I'm looking forward to it. I want to see this movie. I'm just curious about it. Of course, having lived that time frame from the angle that I have lived it, it's a unique perspective for me. We'll see how it all plays out. But yeah, Dumb Money coming to a theater near you. I think this Friday it opens everywhere. I think it'll be available everywhere to be watched. So it'll be interesting to see. I think Pete Davidson will bring in a certain group of viewers, the right age, the 20, 30 somethings. That's who's going to watch this. Maybe some of the 40 somethings as well. But I'm curious. We'll find out from you as we go how many of you will have watched it or are going to watch it or saw it, whatever. Thank you for 79 thumbs ups. And Alberto, thank you for 30 months of your loyalty. I know Alberto has made more than $750 being a Gold Bagel member since he has been a Gold Bagel level member. I know many of you make way more than 1 year's worth of membership fees every week, let alone every month around here. So again, for those of you who are Gold Bagel members, you know how much you mean to me, and you know what you're getting out of this channel. For those of you who haven't yet become a Gold Bagel member, there's some potential there for you to make a few bucks, but you got to take the first step. I've done this step. I'm here. Join us at that level, and you'll get more than just hi, how are yous. Thank you all so very much. Dude, I'm waiting for it till the 29th, till Dumb Money hits my theater right there, right now. Alberto, laugh out loud, much, much, much more, hence my donations. Yeah, thank you, my friend. Do appreciate you. Dude, Nate, BP, sorry, Uncle B, I personally have lost quite a bit on the Iron Condor tips. Market dropped too quick with no cash to buy back. Well, the beauty of Iron Condors, one of the best things about Iron Condors is that your losses are limited based on the trade you make going in. You can set the parameters of your Iron Condor. It's a question of just how long you want them to last, what kind of range you want to have, and what kind of differential between puts and calls you set. And so the Iron Condor thing can be done in baby steps or more based on just how you approach it. But for some of you, it doesn't work at all. It just isn't your style. It isn't your game plan. Fair enough. The trade tips that I'll be putting up will cover a variety of different trades as we move along, not only Iron Condors. But at the moment, yes, I am certainly mentioning certain Iron Condors to your attention out there. Because I know a number of you are keenly into it and you are keenly watching the markets on an ongoing basis because you have become or are becoming quickly full-time participants in this market. And you've got the ability to keep an eye on markets and make your moves and any adjustments, even when you're not in the house because you have everything on your phones. But again, it's not for every single last investor out there. It's a certain set of you out there. Some of you who never thought of being able to write any kind of contract on Tesla or on Apple or like that, because these stocks are just too expensive to get into. But the indexes are a perfect way to take a look at these markets. There you go. Yeah, BP is saying I got stuck with no cash to buy back the Iron Condor with the market drop and margin being negative. You do have to be careful with, again, to your exposure of these positions. It's to each his own. For some of you, you will have a tiny percentage of your account into these. Some of you will go a little more aggressively. I understand. I get it. I know. Whether you're a shorter of stock, whether you're a cash secured put writer, whether you're a deep in the money, poor man covered call writer, there are times where markets can move on you. You have to be able to react. I totally get it. All right, spicy. A spider is dropping the SPYs. Yeah, the market is dropping, so SPYs are dropping. So are the triple Qs. We've got the Dow right now off 192 points, which is 0.56 of a percentage point. The S&P 500 is off 26 and a quarter. That's about 0.6. And NASDAQ down about 91 points, which is 0.61 of a percentage point in the pre-market. That's what I show as well. I've got crude oil down 50 cents a barrel at 89.19. We are 18 minutes away from opening this market for Tuesday, September 26th, 2023. Welcome, everybody, to the show. There were a number of articles in the last 48 hours coming out about the U.S. economy, the future of the economy, the health of the economy. One of the areas that is being talked about now is a couple of things about how people want to stay at home. That those of who have found it very comfortable to work from home do not want to give that up. And another area that sort of overlaps it a little bit is the participation of people in the workforce. And in particular, a lot of emphasis has been focused on baby boomers, interestingly enough. Now, I've mentioned on this channel over the last year or so, maybe longer, how certain baby boomers are just not interested in being part of the workforce in any way, shape, or form. They really don't want to be involved at all. And yet, in prior decades, workers of this age that are now not choosing to work would continue to work. We've had a huge shift in the workforce because of COVID. Remember the few months when COVID really ramped up on us and then hit and everything got the shutdown. There were millions of Americans, Canadians, and Europeans and elsewhere who were let go by their employers. They were given their furloughs, they were bought out, they were laid off, however it worked. In some cases, many employees of companies were offered buyouts to take a hike because companies desperately wanted to reduce the headcount, reduce the obligations to staff, and felt that they could get by with 80% of a company's staff instead of 100% of a company's staff. And instead of just having the attrition thing work, where people just naturally leave the workforce over time, corporations wanted to speed this up. I got to tell you, a lot of people 50, 55 and older were being given opportunities to take a walk in all kinds of professions. Maybe not the healthcare profession where, that demand went through the roof, but certainly in many other fields, people were offered the opportunity to take a hike by taking early retirement. I got to tell you, a high number of these folks took the deal. That those who took that deal are never coming back. They've now been out of the workforce for 2 to 3 years. These folks have got a new life that has nothing to do with the old life that they once had. And I will bet you 95% of those folks have no interest in ever returning back. Any of them who did return back did, and there are no more coming. And now, going forward in time, every 30 days that goes by here means that these folks who left are another 30 days away from never coming back again, because it's to the point now where some of these folks who were 62 are 65, 66, some who were 65 or 68, 69. There's no way. There's just no way. On top of everything else, of course, how many folks who reached their mid 50s and 60s who had certain, let's say, minor health issues creeping up on them and then got an offer to take a hike, took the offer with health care for a year or two, and then qualified for Medicare in the US, or depending on certain countries, of course, they're always covered no matter what. These folks have decided, you know what, I'm going to now use the next few years to take care of myself because my job is killing me. My health will only get worse, not better, if I keep working. Now, in some cases, it's because of physical demands on the body. Others, it's just mental stress. And others, it's just time. I need time off. I need time to rest. I need time to go in for treatment and for recovery and not hurried up, get back to work recovery, all this sort of stuff. And so a huge number, millions and millions of people 50 and older took the hike during COVID and through it and are not ever coming back. Many of them, of course, quit, walked away, took the package, and are working on the side, making a few bucks here and there, keep themselves occupied. Some folks are working at their local golf course as a marshal or as a part-timer here and there. Some folks just took part-time gigs. Others became consultants just out of their homes on a consulting side gig. Tons of this stuff has happened. And these folks are going, you know what, with the pension I got and I'm working on the side over here, I'm making more money now than I made working full-time. I'm not working full-time. I'm not paying the ridiculous tax rates I was paying at that point in time. I'm enjoying my life. This is a big deal. A lot of folks out there have reduced expenses as well by not being employees anymore. They don't need a car for work. They don't need to commute into the office anymore, whether it's by car or mass transit. They don't fly for the business anymore. They're at home. Others have figured out, not only did I quit the job, I sold the house. My wife and I sold the house. We had our condo wherever for this much money. And we moved to where we wanted to retire to, where our parents have been retired at. We moved there for this much money. And we got our new place for hundreds of thousands of dollars less, way less in cost. In effect, we sold a home that still had a mortgage on it to get a home without a mortgage, and we had cash left over, which we added to our retirement base to enhance our incomes to not go back to work. This is the hard reality and major shift of America, Canada, and many in Europe in the last 3 years. And this is why the unemployment rate is so low. There are just people not coming back into the workforce. They have stayed out to always stay out. And don't forget, every month that goes by, more people are joining these folks as retirees, because this month a certain number of people turn 65, a certain number of people turn 67, 68. They retire, they give it up, and they're not coming back. The newbies, the 20 to 30-year-olds who are supposed to come into the workforce, who will eventually become senior managers, mid-level managers, VPs, and you name it, there aren't as many of them coming into the workforce because we didn't have kids. We didn't have enough kids to create enough of these next generation workers to fill the void. And so businesses are scrambling. Human resources departments, HR departments are scrambling all over the planet to find replacements for various skill levels. And this idea of corporations demanding that everyone come back to work, that's a fallacy. That is not true. There are a number of companies out there who have figured out we don't need all of our employees to come back. We can find people to work for us remotely from the planet rather than from just our town or our state or our province or in our country to fill the void. And this is the new normal. And so there are a lot of digital nomads out there, millions of them, that are silent, that travel, that have traveled to a remote place or to a new place or to where, and they are digitally working, and they're not on the radar screen. They're not necessarily in any reports because governments around the world, some are very advanced, many are not, and they're using 1970s and 80s technology to track the workforce that they're able to track, but they can't track the gig workers. And how many gig workers are working from home on their computers, and on the side, they're driving an Uber to make a few bucks on the side, or delivering pizza, or working at a coffee shop, or whatever. They're making a few bucks here on a steady type job, but they're doing a lot of their work over here, and that is where they're headed for. They want to be a gig worker. How many young kids, and I mean 40 and under, have figured out that they can be remote workers, digital laptop kind of people with their phones and their iPads and their laptop, and they can travel to places like Bali for like 3 months at a time. They can go to Australia. They can go to New Zealand. They can go to Thailand. They can travel to anywhere else in Asia. They can travel throughout Europe. They can travel Africa, South America, anywhere in the USA and Canada, because their passports allow them to do it. They don't spend enough time in any one country to be an issue. They're well within their non-visa required rights. There are people out there who have disappeared off the face of the earth as far as North American employers are concerned. They can't find these people, and these folks aren't interested in working for any corporations. They are becoming self-employed nomads unto themselves. They're becoming consultants to other young people, which is an area that corporate America can't get into. It just doesn't have the brain power. The folks there are too old to understand, other than young-run corporations, which is a minority of the world. Young kids under 30, under 40 are speaking to themselves and making money from their own kind, let's just suppose. They do not need to be in a city with a storefront in downtown anywhere. This is the new normal. There are you folks out there who watch this old man speak from a place like Vienna, Austria, about the markets and the world as I see it. And you've all become self-employed digital nomads yourselves. You're trading your own accounts digitally wherever you are, away from the boss. And this, you're never going back. You're just not going to go back. You're going to become more knowledgeable about how the markets work. You're going to become more knowledgeable about option writing, what have you, iron condor trading, and you're never going back. And this is the new normal for you. And you're not alone in this digital revolution. The problem is you can't find a local club in your town filled with these people like you, because there is no local club to be had. It's not physical. It's not a physical location thing. You're all like cats. You're out there. Some of you are traveling to see relatives, friends, and whatever, just in your own country, some just in your state. Others, you're traveling internationally, and you don't know where you're going to be 3 months from now, because you don't have to know. You don't have to know where you're going to be in 3 months. You can decide that 2 months from now. You can decide that 2 months and 3 weeks from now. Where am I going next? It all depends on the best ticket deal, the best airline sale. Where am I going with my points? Where do I want to go to next? Oh, the weather in Germany is not so great. Well, let's go to Italy. Let's go there for a while. Let's take a quick Ryanair flight from Italy to Spain. Or let's go to the Canary Islands. It doesn't matter. It's opened up the world to another level that you never thought possible. I dreamt of this world when I was a young man. I thought, wow, wouldn't it be great to be able to travel the world and be paid while you're doing it, so that you're not just traveling 1 week of the year, 2 weeks of the year under that very strict workload thing that we've all been brainwashed into doing. I mean, factory workers, good Lord, can you imagine how difficult it is for a factory worker with an imagination to want to get away? They got to work their 40 hours a week, their 37 hours, whatever those shifts are, day shift, day shifts this week, night shifts next week. Good Lord. The getaway is huge. How many kids who've graduated university or gave up on university after a year or two went all into a digital existence with digital stores, digital merchandise, just resellers of existing merchandise from around the world. And they're realizing, I don't have to be at my mom and dad's house to do this. I don't have to be with my buddies in the dorm to do this. I can basically travel the world and live in hostels around the world. I can travel with a college friend or two. We can travel the world together with our own digital businesses and see the world together as pals and be each other's personal backups. This is a world that didn't exist the way it's existing now. Welcome to the digital reality of 2023. It is continuing on. There is no stopping it. And those of you who figured out how to be traders of your own accounts through the options market and whatever have you, congratulations to all of you for that. We are now at 89 and counting thumbs up. So we're opening in this market in 3 minutes. So thank you all for popping in. Nice to have you here. What else is going on? Let's see what's going on. Manager, quick question. I'm setting up the iron condor in the scenarios you presented. I'm seeing a credit of 153. Am I good to go? I don't have live quotes in front of me. I'm assuming you're okay. I was looking at credits of about $1.50, but again, the market is fluctuating, so I'm not sure. Uncle Bruce, you're hip on world politics, especially Canada. What's your opinion of Trudeau and the House of Lords hosting Zelensky and giving a standing ovation to a literal Nazi the other day? I have no opinion. I didn't see it. I heard about it, and I'm just kind of going, as stupid is, as stupid does. From what I understand, it was the Speaker of the House of Parliament. His staff vetted someone, and that's how that person was honored. That's all I know. And frankly, I couldn't give a crap. It doesn't matter to me. I don't care. You need to keep 25% in cash and keep option BP positive. I have found Tasty Trade will not allowed to be negative. JD seems like a crazy lapse of judgment. No sell, new sell. Did Uncle Bruce not explain the margin requirements of iron condors? BP, the margin requirements depend on the platform used, and that's what I have said. Each platform has its own rules, and I don't go into them because I don't promote a single platform. There are too many of them, and depending on where you live, you may even have different rules from country to country, let alone inside one country. So that's the thing about the iron condor margin requirements and the platforms that you want to use to trade them. So that's basically it. That's all I can say. I did mention that a lot in my presentation when I introduced condors to all of you. All right. And of course, I mention that, of course, all the time on any option strategy you want to employ, anywhere you want to employ it. It's up to your platform providers. You have to adhere to their rules. I can't tell you what they are. I don't know them, and I'm not studying them. I'm not going to do it. We're going member-only commentary now. Thank you, all of you who have been here all morning, who are here all the time. You lurkers out there, I love you guys. Please become members of this channel. Add to this group of some of the greatest YouTubers out there. 91 of you have come in with the thumbs ups. Keep them coming in, and join us as a member ASAP. Become a member today and join this channel. We'd love to have you here as we grow the channel out. And if you are enjoying the tips, I appreciate that. I hope you're enjoying them as well. Alrighty, there it is. Welcome everybody. Larry Titus, bing, bing, The bells have been rung. We're up and running. We're in Vienna, Austria, Jennifer and I today. Welcome all of you to the show wherever you're watching us from around the world. Glad you're here. Thank you, Larry, for hitting the bells. And we'll get this trading day started and see what this market has in store for you today. Thank you, one and all. I'm showing the downside, which we had predicted. 195-point dip on the Dow as a starter. That was what we were looking at, our negative opening, no doubt about it. The question is, how much is it going to really be today? That's the question. Europe is down about 0.75 to 0.8 of a percentage point. The Dow is only down 0.55, S&P down 0.70, and NASDAQ about 0.75 of a percentage point lower on the initial minute or two. We'll see if that adjusts as we go through it. I'm sure it will. Oil just off 11 or 12 cents as we start here. The futures 89.56. We'll watch that over the next hour or so. Thank you, everybody, for popping in and saying hi. The U.S. 10-year, 4.51% on your money right now if you give the government of the United States money for a 10-year note. The euro is under 106. The pound is under 122, still falling. For those Americans out there traveling the world as digital nomads, life is getting cheaper in a funny kind of way because your American currency is rising in value. The thing about being a digital nomad is, of course, you can be paid in American money no matter where you are. So if you're working out of Bali or out of Sydney, Australia, or you're in the outback and you've got internet, you're in anywhere in Thailand or wherever, you can quote your business in US dollars and you can deal with just American clients if you like, and yet spend third world money or other money instead. Kind of interesting how that has happened as well. Constantine, Bruce, thumbs up number 97. We're going for 100. Thank you, Constantine, for being there. Appreciate it. We're down 176 on the Dow. I got Adobe down 460 at 507. I got the Spiders down 309. Q's down 301. GameStop is off 21 cents. SoFi off 12. Apple down 154. Netflix down 231. AI down 27 cents. NVIDIA down 311. Tesla's down 320. Manager got to be happy with that. Rocket Lab down 4. Matterport looks like it's up 3.5, and SmartRent is up maybe a penny. Owens Corning up 18 cents. ATIP at $9, up 20 cents. We got Unity down 32. Google down 146. Moderna is up 28 cents this morning. Cisco also ahead by about 28 cents. Cisco down 28, pardon me. Pfizer down 21. IBM is off 97. It's at 145.50. Tried to get to 150 last week. HPQ down 19 cents. Microsoft down $3. ME off 6 cents. Amazon down 153. Spire is up 4. Home Depot down $1.23 or so. Vanik Semiconductors down 170. Goldman down 291. This red wave is opening up just like I figured. BA down just 28 cents. Boeing, that's not much. 198.50 a share. Meta, Facebook down 390 at 296. I know last week, I saw this stock as high as 307 just in the last week, and about 2 weeks ago, over 311 was the trade. I'm not sure. That may have been the high of the year. We may have had the high of the year at 326 in the last 2 weeks on Facebook. Now 297. So a $26, $28 give back on a fast run up on Facebook. Interesting, the old Meta platforms. Target down 23 cents. JP Morgan down 117. Costco's up 180 to $560. Walmart down 6 cents at 163. Disney down 41 to $80.60. American Airlines unchanged, $12.91. DraftKings up 97. Got an upgrade today. It's $28.43, under that 30 mark. AMC not having a good day, down 22 cents at $7.92. Royal Caribbean down 47 cents. One of those cruise stocks not running higher today. 158 is the dip On the Dow, from what I can see here, let me double check on this market. For the USA, 151 drop on the Dow, 27.8 on S&P, 94 on NASDAQ, and oil is off 18 cents, roughly, now it looks like about 12 cents, 89.56. There's talk about the government shutdown. Biden officials says that government shutdown will end food benefits for nearly 7 million mothers and infants. And it's pretty dire, says John Hancock, a John Hancock strategist of the sentiment on Wall Street as bond yields march higher. It's pretty dire, he says. Well, again, I keep coming back to the reality of the situation here. These Wall Street hotshot experts are probably under 40 years of age. Some maybe mostly under 50. There are very few Wall Street top-notch guys that are 60 and 70 years of age. These guys have been put out to pasture a long time ago. And so we're talking about people who've never lived through a reality of high interest rates, high inflation, and high unemployment, high corporate debt, and a complete drop-off of demand for goods. None of these guys have ever been through it unless they've lived in Venezuela or Bolivia. And even then, it's not real, because it's real for them, but not really real, because I lived through, my father lived through, and all of your parents who are out there, grandparents, they lived through this nightmare of the 70s and the 80s that lasted a good 10, 12 years of very high unemployment. We're talking 8 to 12% unemployment, and worse, inflation of 12 to 18%, interest rates of 14 to 18 to 20%, and no demand for product. We had factories closing everywhere. We knew that the Rust Belt phenomenon was going on, but that didn't make jobs appear anywhere else in North America. As soon as Westinghouse and other corporations, these Zenith television plants and RCA electronics centers, all of these factories closed down. Levi's left America to make Levi's overseas. When they all left, there were no new jobs to replace these jobs. And so we had people on unemployment, or who found out very quickly they didn't qualify for unemployment for many different reasons. Governments came up with all kinds of roadblocks. They had no money to pay them. And so we went into real recession. I mean, it was really ugly. People trying to sell a car that they bought just a year or two ago for book value to be only offered half book value for a vehicle. And there were no other takers, period. We had people getting wiped out. The drop of the standard of living in North America, Canada, USA, was unbelievably bad. It was so quick, so sudden. This happened during the late stages of the President Ford presidency, Nixon presidency, Jimmy Carter, Ronald Reagan, and George Bush. This happened all through their presidencies, one after the other after the other. It was bad, and Congress couldn't stop it. The Senate couldn't stop it. The White House couldn't stop it. Canada couldn't stop it. Britain was getting kicked. They couldn't stop it. And Europe was a hodgepodge of independent countries with all their own currencies and all their own nightmares. And China was a nothing burger at that point in time. It was a rough time. Anyway, there you go. BW US 10-year is at its highest point since October 22nd, 07. Things are getting very, very real, very fast. Been on a continuous slide since the 70s. What strength being shown? Way to go, USA. There were obviously turnarounds finally happening in the North American economy and eventually the world economy. And it came from efficiencies. It came from corporations being able to deliver more from less. And it meant increases in efficiency in factory floors, in offices, computerization, software improvements, this area. Accounting departments inside corporations used to employ a huge, vast number of people. And accounting departments shrank in how many people ran it. And it was the same in other divisions like shipping and manufacturing and distribution and sales. Gone are the days where a corporation has 50 guys, generally men, as salesmen, personal salesmen, going out to all the accounts to try to run supply business. It became a telephone, computerized kind of world, and websites eliminated salesmen left, right, and center. Companies figured out ways to promote their product that way. The Amazons of the world were not created in the 70s and the 80s. But when Amazon did get created, it was a way to get to millions of potential buyers through clicks of a button for millions of items that it took several decades to get Amazon all set up that way, and eBay and Shopify and all these other outfits. They all made business a lot more efficient and a lot cheaper to operate. And one of the areas where it's a lot cheaper to operate as a business, the brokerage business. Stockbrokers got eliminated, desk traders, floor traders, all kinds of us were eliminated from existence because the markets went digital and they went online. And eventually they ended up right down to this. That's all you need to trade stock and options is this. The world has completely changed from 1980 to 2023. From 83 to 2023 in 40 years, hundreds of millions of jobs have disappeared, never to come back. Hundreds of millions of people are out of a profession. We had to learn how to get new jobs, no matter what jobs we were doing. Sure, lawyers were lawyers in 1983, and they're lawyers in 2023, but their worlds have completely changed. Car manufacturers, sofa makers, sofa sellers, furniture stores, retail stores, and at-home retailers. Everything has changed. Barbers are barbers. They're waiting for us to come in, sit in the chair. They can go hands-on with us. Fair enough. But their landlords have changed. The insurance companies that insure the landlord's building, they've changed. Do you remember going, do any of you ever remember going to an office of an insurance company to buy auto insurance for your car? Do you remember when you used to shop for different auto insurance rates? You'd go from company to company to company to company. Or a friend of yours at work says, I just got insurance for my car from so-and-so. You should go and see those guys. I got a way better deal than from that company over there. Today, online, clickety, click. It's unbelievable how all that has changed out. You don't walk into an insurance company anymore. It's almost unheard of. Who walks into a bank to do any banking anymore? Come on, it almost doesn't exist. There you go. Citadel was fined nearly $7 million by the SEC, says Deep Value Options, for naked short selling on Uncle Bruce's birthday. Manager, can those barbers be replaced with an AI robot? Would you trust an AI robot to cut your hair? Not too keen on something like that. But then I'm old school. What do I know? I don't know. AI is green, by the way. We're up 6 cents. Rocket Lab is up 6.5. Tesla's only down 64 cents, by the way. We're green on SoFi, up a penny. We're green on GameStop, up 12 cents. The Dow is down 134 right now. At the moment, we seem to have a little bit of improvement there. Scary thoughts as manager on Barber. BP, so a very pretty fine DVO, $7 million fine when you naked short for billions and billions. There you go, my friend. You know it. Down 134 on the Dow. I'm noticing, let's take a look here on this market. 1777 on GameStop, up 10 cents now. The Dow down 140. S&P down 26. NASDAQ down 88. That's 0.4 for the Dow, 0.62 for S&P, and 0.66 for NASDAQ. Oil holding a 3-cent gain at 89.71. That is what's going on there. U.S. home prices rose in July. Case-Shiller says. That's the story. I don't know how much they rose, but that's the headline at this point that I have. At the moment. Slight improvement in the markets at the moment, but is it just a dead cat bounce before we give up ground? We'll find out in a few minutes, an hour from now. We'll know whether this is just a little blip. But the good news is it didn't take much for GameStop to go green. It didn't take much of a run. Didn't take a lot of volume. It didn't take anything crazy to happen for GameStop to go green. 160,000 traded today. That's a nothing burger. SoFi up a penny on 1.29 million volume. It didn't take 20 million shares of buying to turn SoFi around. I'm kind of wondering if SoFi and GameStop are at their lows. Have we kind of seen the lows of these two stocks after their sell off over the last several weeks, last month or so? Is this it? Maybe it is. Maybe this is it. Because I can see here that GameStop was $16.30 on the 24th of August. It recovered to $19.20 and then down to 17, back up to 18.30. Here we are at 17.65. It has been kind of around here since the middle of August. This is the latter part of September. 4 or 5 weeks, we really haven't gone much lower than this on GameStop. Is this the low? For SoFi, 752 last trade. Looking at the last month, we were 870, 850. This is early September, going back 3 months. 805 on July the 7th. We had the spike. Definitely had the spike at the end of July, early August, getting us up into that almost 12 range. Then backing off to 811 on the 17th of August, 870 on the 30th of August, $9 on the 12th of September, 907 on the 15th. Now 750 last 3-4 days here. Is this it? Is this market kind of saying, yeah, we really don't want to go lower? We were down into the low of the year in May. We did hit that 420 in May, but we really haven't given up 7-ish sort of since, really. The first wave was June the 14th, reached it close to $10. Then it was July 31, August 1. The next wave, is there a wave coming at the end of September, October 1? Is there another peak, or are we going higher? Are we going to come out with the rumors of higher earnings than expected for the coming quarter? And could that pop us through 10, through 12, and more? Are these the dog days for SoFi and GameStop? I don't know. 752, 753, 1779. Both are green right now as the Dow is off about 140 ballpark points. Let me double check that. Yeah, 143 on the downside, 28 on S&P, 94 down dip on NASDAQ. So these two stocks are kind of saying, no, I'm not really, I'm not actually backing off here. Sorry, we're hanging around these numbers. I don't know. Anyway, we'll see what's going on. All right. A little old slap on the wrist is deep value for the thing on Citadel. There you go. Well, time will tell how everything works out. GameStop is up 6-7 cents. SoFi about even. Apple down 227 at 173.81. Netflix down $3. AI down 24 cents. Nvidia down $4. Tesla down 260. Rocket Lab down a penny. Matterport up 1.5. Smart Rent unchanged. Owens Corning up 62. ATIP unchanged. Unity down 23. Google down 249. Moderna's up 66 cents. Cisco down 27. Pfizer down 26. IBM down 70. HBQ's off 20 cents. Microsoft is down 317 at $314. ME down a nickel. Amazon is down 240. Spire's up 3 cents. Home Depot down 236. Manic Vector's down 172. Goldman down 230. Boeing down 65. Meta down 291. Target down 17. JP Morgan down 111. Costco down 180. Walmart down 18. Disney down 55. American Airlines up 9 at $13. DraftKings holding an 84-cent gain with the upgrade today. 28.20, though, still under 30. AMC 802 down 12 cents. Royal Caribbean down 43 cents at 90.54. Royal Caribbean did reach a high of 112.95. Someone paid that much for this stock. $22 ago. Yikes. Yeah, well, not a fan. You guys ought to know. You all know that. I'm not a fan of the cruise stocks. Yikes. They keep recommending it. Analysts, it just blows my mind. These guys are not making money. Anyway, there you go. I don't know. All right. Let's see. Firmless, I'm not going to take barbering advice from Uncle Bruce. I'll take stock tips, but not barbering advice. There you go. Yeah, I'm not your barber. I'll tell you that. Oh my gosh, a 169-point drop on the Dow. We might be going into another little sell-off. We'll see how that works out. SoFi at 749, 750 a share. Down 34 on S&P, down 0.8%, and NASDAQ is now down 0.93 of a percentage point, 123-point down dip on NASDAQ. So the stocks had a bit of a bounce, and now they're lower than their lowest lows. So these are the lows of the day. 172 on the Dow, down 34 on S&P, 125 on NASDAQ. Oil holding a 7-cent gain, which defies all kinds of logic. But hey, it is the market. What can I tell you? The market is the market is the market. AI down 33, Tesla down 3 again. So Tesla has backed off from a little tiny rally. And GameStop is down a nickel right now, and a SoFi down 2 cents. So they're a little negative. Nothing dramatic, but they're off just a bit at this point, folks. 114 thumbs ups. Thanks, guys, for sticking with me and throwing that out there. Appreciate it. And I appreciate you being here. Nice to see you here this morning, live from Vienna, as we watch these markets here on a Tuesday morning do their thing. As I said, I think it's a red day. Don't know if it's a bloody red day, but it's a red day. The markets are adjusting to the reality of longer for higher for interest rates, up higher for a longer time frame, which will eventually cause damage. And that is something to remember. Excuse me. When I, as a young adult, really started paying attention to the economy, what struck me was how negative even the analysts and news people were for the economy and what the government or banks could do about it. When you had unemployment at 12% and you had inflation at 18, interest rates at 18 to 20, and no demand for goods and services, what was a government to do to make things better? Reagan was saying, oh, well, we got to cut taxes. People are overtaxed. Well, guess what happened? They did cut taxes. They also cut spending. And when governments started to cut spending to try to balance their budget, they took money out of the hands of the poorest of the poor, the bottom half of the economy, a lot of which were working people getting by with some food stamp assistance or what have you. The unemployed were getting unemployment benefit cuts. This made the recession worse. This took away demand from the economy. This just made it worse. and governments were doing the wrong thing in the wrong way. The answer really was they should have gone deeper in debt, but they didn't want to because they kept losing re-elections. But they should have gone deeper into debt and given more assistance to those who needed it. The rich didn't need assistance; the poor did. But unfortunately, the pain lasted a lot longer than it needed to, and it did last until the late 80s, early 90s, unfortunately. And a lot of people, a generation of North Americans and Europeans really paid an economic price, a terrible price. And they had no political voice. They had no way to get their elected politicians to help them. But the Defense Department got all the help they needed. The automotive manufacturers got all kinds of help. The airlines got all kinds of help. Pharmaceutical companies got all kinds of help, but individuals did not. And it just stretched out the suffering for a lot more people for a lot more time. Cindy B, good morning. I'm number 114. BW, can we invest in BTCH? Maybe Iron Condor worthy ticker. Haha. Splitter, Uncle Bruce, I can choose on Canopy only Jan 24th, April 25th, and then Jan 25th. There's something the bid and ask is the highest in April. Would you recommend to go next possibility again? I guess where I don't follow Canopy, so you're kind of you have to decide for yourself. Do you want to go further up? But time can be your friend. Just it looks like it's the best gain with time depreciation. Again, time can be your greatest ally in an iron condor and in option writing. Absolutely, time is your ally. It is your weapon, especially when contracts get closer to expiry. It's your weapon, but it can be your ally as well. And for those of you bringing in income, writing contracts, time is your friend. Don't be afraid to go further out in time and go further out in strike prices as well. The Dow down 176, Adobe down $6, as Spiders down 360, Triple Q's down 380. GameStop just down 2 cents. SoFi down 6. Apple down 281. Those are the early indicators right here. Hawkeye is in the house. Number 117. Thank you, Hawkeye, for the 117th thumbs up for our show today. We now have 119 that have come through. Thank you all for these thumbs ups. I appreciate them. Triple digits and climbing. Thank you very, very much. Coming up now to 1 hour, 27 minutes, 1 hour, 28 minutes on the air today. FX number 117, I think. Welcome, my friend. A spicy spider trade did not hit this morning. I'll leave it for now. There you go. Again, you can adjust your condors any way you like. This first hour might make you want to adjust these pricings on the condors I suggested today. You decide for yourself how much spread is the right spread to set it all up with. You don't have to go out as far as I've indicated. You can come in closer. You can have a wider or tighter spread on your puts and calls. But the overall idea is there. And now you can decide whether this is for you on any stock you follow or particular indexes. You figure it out, whatever works. Uncle Bruce, what iron condor would you do on GameStop? Or is it even worth it? Well, GameStop could be an iron condor. But again, this is not the hottest stock in the market to work on anymore. This is not the GameStop from January, February, March of 2021. This is GameStop 2023, and things are slower without any doubt whatsoever. For those of you who don't ever want to give up on GameStop for a potential run, maybe the way to go is to do covered calls, poor man covered calls. It can be an instrument to use to make money. Cash secured puts, perhaps. Iron condors, maybe not. AI, Unity, Adobe, Triple Q, Spiders, Apple, Netflix, Nvidia, Tesla. these are stocks you can certainly look at for iron condors. You can look at Google, Moderna, Cisco, maybe Pfizer, maybe not, IBM, perhaps. So these are quiet. Some of these are quieter than others. Microsoft, Amazon, Home Depot, Vanek Vectors, Goldman Sachs, Boeing, Facebook, Meta Platforms, Target, JP Morgan, Costco, maybe Walmart, maybe Disney. These could be stocks that you could consider iron condors on. It's just a matter of, can you find an iron condor you're comfortable with enough of a spread between puts and calls regarding the amount of time you're issuing for these trades. That's all it is. These indexes are perfect to write condors on, except you must be vigilant about your positions. You have to be on top of it at all times, because movement can happen at a moment's notice for any reason, anything. Something happening in Russia, Japan, China, Kentucky, Bolivia, I don't know, any reason. You have to be on top of it. You have to have flexibility. You have to have marginability. You want to work with condors in a comfortable way to stay on top of this market. There you go. Simple as that. Manager 966 locked in on Tesla short and one account, waiting for the other one to reopen or to ripen. That's why I struggle only between January and April, because in case I have to roll over, I don't know if April is smart. There you go, my friend. I know you're dealing with an entity that is not the most active of all, but there's probably activity for you, whatever it works. You have to decide for yourself if that's where you want to be on the canopy side of these trades or not. The Dow off 182, Adobe down 650, Spiders are down 370, Qs are down 392, GameStop down 9, SoFi off 6 cents. At the moment, that's what I've got on this market. Taking a look here at other U.S. trades, the Dow off 185, half a point. S&P down 0.85, down 36. NASDAQ down 1%, 135.9 points. Oil absolutely flat, unchanged, no difference whatsoever. Okay. Consumer confidence in the U.S. declines to a 4-month low. And the consumer confidence index falls to 103 in September from 108.7. Those are the headlines just coming through on that. These are not surprises. These should not be a shock to anyone watching this channel. We've been talking about the decline of the American economy and the confidence levels and the other indexes. What we're surprised at around here, I think, is the lack of conviction on the VIX. Although today I have to say it's 1756, up 66 cents. So even the VIX is a bit higher today, and that's been a while in coming. We really haven't seen this coming our way much lately. If we get over the 20s, there will be articles coming up quickly on that. So we'll see what gives. All right. Brian, good morning. Vietnam, number 120. Thank you, Brian, for the thumbs ups. Appreciate you today. Good to have you here with us. Welcome to the party, pal. The Dow down 199. We're going to go for a 200-point drop right now. And the GameStop are off 9 cents. SoFi's down 8 so far this morning. All right, everybody. Welcome one, welcome all to the show. If you think the markets are nearing their bottom of the day, you may want to look at those condors for spiders and triple Qs. But I would suggest the further out you go with a wider spread, the best way to play it. My opinion. That's how I figure it. But to each his own. Down 201 right now on the Dow Jones at the moment. There you go. All right, there's the latest on this market. There are still analysts out there looking for a higher market overall, looking for a rise in the S&P index by 19% over the next 12 months. They've put some stocks out there that they like and why. Interesting. Let's see if I can find these. The outperformers apparently are companies called Solar Edge Technologies, Insulet Corporation, Dexcom, FMC Corp, United Airlines Holdings, Moderna, ResMed Inc., Etsy, Alaska Air Group, and MGM Resorts. The laggards, a company called Expeditors International of Washington, Tyson Foods, Consolidated Edison, Robert Half Incorporated, Amgen Inc., Progressive Corporation, International Business Machines, Aon PLC Class A's, Seagate Technology, and CBOE Global Markets. That would be the Chicago Board Options Exchange. That's their favorites and not favorites. So you decide whether these people are right or wrong or whatever you think. Those are some of the estimations. Okay. Jamie Dimon from JP Morgan on interest rates. I'm not sure the world is prepared for 7% interest rates. That's what he's talking about. London's Gatwick Airport imposes daily flight limit amid COVID-19 outbreak. Interesting there. It's an interesting comment. Interesting story. Within air traffic control statement Monday, the airport said the daily 800 flight limit has been imposed until Sunday. They said around 30% of the staff in the division within air traffic control are off sick for a variety of reasons, including COVID-19. So there you go. That's surprising to hear about that. They do work in close quarters, so I guess that's part of it. Not good for the UK economy to have Gatwick restricted. Obviously, we haven't heard anything about this from Heathrow, but we have heard it from one. Okay. Interesting stuff. At the moment, the American market down 192 on the Dow, S&P up 37, NASDAQ down 135. All righty, there it is. Welcome to the party, pals. GameStop down 4, SoFi down 4. They're not leading the market lower. They're just kind of meandering along, kind of going, well, market's lower, we'll go lower a little bit, but we're not going to lead it any lower. Let's see. Slater's having a tough time with his stock here. Brian, Goldman Sachs says the amount of shorting in the past 6 months is the highest it's been since the last decade, in the 98th percentile. Sounds like everyone is betting against the market now. You know what that means. It can go the other way. That's true too. We'll have to see how that plays itself out. I don't know. Is that going to happen? Well, it can. I mean, it can. I've talked about this before. Sometimes I talk about how markets are oversold for a week or two or a month or so, but it can happen on an entire index or group of stocks that, the selling is just overcooked and it has to bounce the other direction. But you never know when and how far. Sometimes the bounce back is only 5% and it stops. Some of these mini bounce backs confuse certain analysts. They think, oh, here it is. Oh, we're on our way. And then the whole thing drops. You get faked out. You never know. Well, there you are. Spare saying, they say on German media that we're since March at the lowest point of the year. So that, we've been at the lowest point of the year since March. No recovery yet. Here we are in September, 6 months later, no recovery. Down 209 on the Dow. Adobe down 701. GameStop down 9. SoFi down 2 cents. These two stocks are not leading the market lower. Apple down 284. Netflix down 430. AI down 28. Even AI at $24 just doesn't seem to have it in it to give up more ground. NVIDIA down 170, Tesla down 176. We're not getting a real death march going here at all. It's just not happening. So all I can tell you, that's what I'm saying. What can I tell you? The Dow off 211, S&P down 39, NASDAQ down 142. 1% for the NASDAQ, 0.9% for S&P, and 2/3 of a point for the Dow. That's all. It's just 2/3 of a point for the Dow. It's not leading the market lower. It's being led by NASDAQ, growth stocks. Interesting. Rocket Lab up about a penny at the moment. So there, it's holding in there. Matterport down less than a penny, 0.8 of a penny. So it's not going anywhere. All right. Spire down 2 cents. Okay. ATIP up 20. Go figure. Smart Rent up a half a penny. These guys are not leading the market lower. It's the big ones, the big boys. Apple, Goldman, Cisco, Tesla, they're all lower. Microsoft down 480. Pfizer, HPQ, Google down 309 now. Amazon down 380. NVIDIA, Unity, AI, Adobe down 750. Netflix down 420. These guys are leading the NASDAQ lower, and everyone else is in sympathy, backing up a little bit along with it. That's it. Okay. Yeah, Brian, I read yesterday that more and more of these analysts are predicting $100 a barrel for oil before 2024. Well, you know what these guys do? They'll announce this, right? And it doesn't happen, so they push it up to 2025. Sooner or later, they're going to be right. Something's bound to happen, but you don't have to be right to be quoted, I guess, to get attention. I don't know. Just, yeah. Goofy guys. There you go. These guys are never held to account, They never have to guarantee you, never have to give you a refund if they're wrong, right? 123 thumbs ups now. Thank you all for the support. I appreciate it very much. Yep, there it is. All right, there's the story. I'm sticking to it. We're down 235 on the Dow at this point. We seem to be hitting the low of the session right at the moment. Again, is it got more to it than this? I don't know. We're down a point now, 1 percentage point on the S&P 500, 42 points, 1.07% lower on NASDAQ, down 142. Okay, 247 drop on the Dow. It's still behind NASDAQ, 0.73 versus 1.1% drop. So the Dow is lagging, not by a lot, but it's lagging the NASDAQ. There you go. Welcome to the party, everybody. Good to have you here. Thank you for joining us today. Thank you so much for being part of this group of viewers. Thank you for being some of the best YouTubers, period. There are none better than you guys. Appreciate the loyalty to this channel, even on down days. Some of you are making money today. On down days, you're making money. Some of you have options that are dropping like you want them to. So there you go. Okay. Congratulations to all of you out there making some bucks. All righty. Well, I think I'm going to pack it in from Vienna. Jen and I are going to get a little bit of rest here and figure out what we're doing this afternoon. We've got to figure out where are we going to have dinner. I think we might get a little nap in first. We'll see what's going on. Thank you all for being part of the show today. Appreciate you to be here. Appreciate it. And we'll catch you guys tomorrow morning. We'll get you another trade tip. See what we can find for you. Let me know how you're doing. Keep it going, everybody. Thank you for becoming members of this channel. Thank you so much. Lorraine, 114 thumbs ups. Thank you so much. It's now 4:14 here in the afternoon, and we'll figure out dinner and figure out what we're doing tonight. Thank you, guys. Brian, thanks to the show. Could be enjoy yourself. Time to rewind and watch the first hour. I'm always late. It's all good, Brian. No problems at all. Thank you all for best wishes for my birthday on Friday. It was very kind of you. It's a great day. We're down 277 on the Dow at the moment. That's the low of the session. S&P down about 46. and NASDAQ down 163. NASDAQ down 1.2, S&P down 1%, Dow down 0.8 of a percentage point. Oil going negative again, down 19 cents a barrel, 89.49 is the deal right now. That's the price on West Texas. Have a great rest of the day. Thank you, all of you, for thumbs ups and sponsors of this channel. 125 thumbs ups and counting. Keep those coming in on the rerun. Thank you all. And we'll see you first thing in the morning for your time, for sure, as we go. Manager, $1,400 profit in Tesla, just doing day trading in and out. Way to go, manager. You keep that going, buddy. And all the rest of you out there, take advantage of your options and make some money. Uncle Bruce, I'm trying to figure out what to do. Last Tuesday, I wrote 424 and bought 423 for puts and wrote 455 and bought 456 for the calls and SPY. Time. If you need it, pull the time card if that's what you need to make it work. Down 284, 290 on NASDAQ right now. Anyway, there's where we're at. I was expecting a drop, but not expecting $15 drop. October 6th is when they expire. If you need to go to 13, you do so. It's in your power to do so. Just keep an eye. Just stay on top of this. These markets will fluctuate a little too far one direction. They'll go the other. We're down 291 on the Dow, and it doesn't go straight up. It doesn't go straight down. But there are days where it upsets people. I'll tell you that. 293 dip on the Dow, 0.86 of a percentage point. Not much of a percentage point drop. SoFi down 6. That's all on SoFi. And GameStop is off 22 now, reaching more of the lows of the day over there. Okay, you guys, you hang in there, and let's see what's going on. No more Twinkies and wine for dinner, Uncle Bruce and Auntie Jen. We'll try to behave ourselves, I promise. All right, guys. Thanks all. We'll see you tomorrow. You take care. Bye for now.